Yeah. Let's get it, let's go. Let's get it, 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 let's go. Let's get it, let's get it, let's get it.
Big bad, that's preem. Pirates attacking the dreams. Get embarrassed, out making a scene. All of these characters facing their fiends. I told my cousin we got it, we gon' get up out of here by any means. This for the times we was hitting that deli, we split up that turkey with cheese. I had to make a decision, my cuz told me listen, you nice, but ain't master the craft. Stick to the script and keep working your penmanship. When it's our time, we gon'
Welcome.
Niggas ain't
We are
listening
back
to you
again
until you pull
with
up
another
in the back.
episode
Bro,
of
that's
the
a fact.
Network
So
Nights
the whip before
podcast.
started, I'ma get
Of course, I'm your host, Khalif Israel, Leaf Israel, aka BKA, whatever you want to say. But guess what today is? March 1st. Welcome to a great month. It's your boy's birthday month, so you already know it's gonna be great. I hope everybody's weather is going well. In Charlotte here, it's getting nice and toasty. So I know it's gonna be it's gonna be lit for the spring, definitely lit for the summertime. I mean, the mask mandates are loosening up. Seems like we're getting back to normalcy, which we're all, regardless of your political, whatever agenda you think is going on, I think we're all ready to get back to that. Definitely want to give a shout out to everybody who's showing love on the previous podcast. Definitely took a lot for me to come out here and kind of express myself, not deflect. Got nothing but love, and the visuals, of course, appreciate everything. So keep liking, subscribing, doing the most on all the socials that you see in the front and back end of this, and we'll keep giving you A+ content. Without further ado, though, April 18th. If y'all don't know what April 18th is, y'all slacking. All right. Some of y'all might be ahead of the curve and already know where I'm going. But April 18th is the tax deadline for this year. If you haven't gotten your taxes done, your boy is here to help you. I got nobody else better than to come and talk about taxes than Bobby Mucka. All right. Bobby Mucka is the owner and CEO of the Financial Strategists LLC. This company is veteran-owned and veteran-owned and aims to provide strategic financial solutions to its customers. At the Financial Strategists LLC, they are committed to providing their clients suitable accounting and consulting services in order for their clients to grow in the most efficient manner possible within regulation. So sit back, get your notepad out, because we're going to talk about some taxes. Welcome to the show, Bobby Mucka. What's going on, man?
It's going. How about you, man?
It's good, man. It's good. Again, it's really warm out here, man. I'm like loving it. I kind of want to be outside right now, but this is good too. How's the weather over there? Where are you streaming from at this moment?
Over in Newark, Maryland, over my home office.
Okay.
So it's pretty windy out here today. I think we got like 30-mile-an-hour winds.
Oh.
Yeah. So it's in the 40s, but because of the winds, it's actually like the real feel is in like the low 30s. So.
Oh man. Well, I'm sorry. Now I've just been bragging about the weather the entire time. Thanks a lot, man. Yeah. I mean, hey, I saw Cleveland, Ohio is getting snow, so it could be worse. Good things.
It could be.
Well, hey man, let's cut straight to the chase. Tell the audience a little bit about yourself. I know I gave the gander, or what your company stands for, but let the audience get to know you a little bit more.
All right, so where really to begin? I initially, when I went to college, I didn't really know what I wanted to do. I initially actually wanted to become a doctor. Mm-hmm. And when I figured out I was not good at certain things in the science, I realized probably not the best choice. So then I switched over to economics. So when I was over at the Naval Academy, I was an economics major. Mm-hmm. Obviously, it didn't work out. Had to pay back a little bit of money through 2 years of service in the Navy, and then used the GI Bill to go into finance over in Southern Connecticut State University. That's a mouthful. Mm-hmm. So then that's when I decided, hey, I really like finance. I'm really good at it. Mm-hmm. Why not, become a financial analyst? So I got into government contracting after that. Mm-hmm. That's when I graduated, that's when COVID really hit. And I was lucky enough to actually have a decent job coming out with a salary. And I was fully remote, work from home. So I've been doing this since the beginning. I've literally went into the office maybe 3 times in my whole career as a financial analyst.
Wow.
I feel very fortunate for that. But onto kind of why I decided to get into accounting and finance and taxes, especially. So, my mom is a bookkeeper, so she taught me the basics of bookkeeping and accounting, and I did fairly well in my classes when I was studying finance. So I, kind of put 2 and 2 together. It's like, I could probably do this, and I can do it remote, so I don't even have to leave my house to pick up clients and do this work. It's all fully remote. So it's just all about becoming more time efficient, and kind of understanding where the best bang for your buck is while you have the time to do it. So it's very very
no,
fun.
it's so funny. You never know how many connections you have with a person until you start going back and forth about experiences, and again, you telling just the audience a little bit about yourself. So my mom's a bookkeeper as well, so it's like, oh, that's the connection there. Obviously we both went to the academy, study economics as well, connection there. When I was leaving the Marine Corps, I actually did accounting classes too, so bookkeeping classes. And I found out quickly that it wasn't for me. I definitely like the finance aspect of it, but the books, and let's just be honest here, the books definitely they can get kind of dull. But if you, because the rules, you follow the rules, and the best accountants follow the rules the best, or they know how to, as you say, stay within the lines of the rules. So much respect to you, man. And I'm really excited because I have questions of my own personal that I definitely want to ask you to see how I can maximize my situation. But we'll keep it general. Let's start. What made you start your business?
Just pretty much the desire for more. Not necessarily financial wise. Obviously, that is part of it, but primarily so that I am not reliant on a salary to kind of make myself complete. Like, I want to be able to provide for my family on my own terms, in my own way. And I felt that starting, my business virtually, after just being a remote financial analyst for so long, I felt it was the best, option for me. And then obviously, as my business grows, because this is my first full year in business, and so far I'm doing fairly well, gathering pretty decent clientele, pretty broad spectrum before I decide, where I want to niche down. So when I can get enough, profit to make this, business, viable, like full time, then I'm probably going to be switching to it full time. And then my goal is to diversify into other, investments. So the real estate, maybe buy up some other businesses that I might not necessarily have experience with, but maybe I have a family member or another connection that is, and I can get some advice, or maybe have them manage it for me for, salary or something. And, just kind of grow the overall, Mucka family holdings.
Understand. So what services does your business provide?
So we primarily provide bookkeeping, tax and accounting work, tax representation, which basically means that I can talk to the IRS for you regarding, taxes due, owed, or if there are any penalties and fees that we think we can get waived. Maybe there's something along the line that we can kind of help.
Understand.
Yeah, and then we also provide premium CFO services, where we basically just take over your whole financial structure. We plan, everything for you. We can help you get deals, etc., depending on, if we believe it's the right fit, and it's the, we feel like we can provide that value to you. Like, I'm not going to, try to get into a business where I don't know anything about it, and I don't know the person I'm dealing with, because there has to be a direct synergy between the people, my clients, and the way they do business and I do business. And I'm very strict on who I accept as clients.
Understand. And I think everybody can understand that, especially as a CFO relationship to a business is a lot closer than a bookkeeper or even an accountant. That's a very intimate business relationship. I know in your designation you have EA, and
Correct.
especially in the financial lane, you have CFP. You mentioned financial analyst, but you have CFP, which is certified financial planner, CPA, which is I forgot what CPA actually stands for.
Certified public accountant.
There we go, public accountant. Thank you. And of course, now you have EA. So I never heard of EA before talking to you. Can you give the audience a little breakdown of that separation?
Yes. So you're not alone. Most people actually don't know what an EA is. So EA stands for enrolled agent. And there's a lot fewer of us than there are CPAs. I believe there's around 600,000 CPAs in the United States or globally. I don't know the exact statistic, but it's around there. And there's only about 56 to 58,000 EAs. So the enrolled agent credential is a license from the IRS. It's actually their highest award. So this is coming directly from the United States Treasury Department. And this allows us unlimited representation rights, similar to a CPA. However, we're a federal credential and not a state credential. So we're able to work with any taxpayer that pays taxes in the U.S. That could be corporations, C corps, S corps. You're looking at LLCs, partnerships, and then just your individual taxpayer or even foreign corporations as well that have to pay taxes in the United States. We can represent them. We can do their returns, and we can. Only thing we can't do though is audit work. So that is strictly in the CPA's domain. We don't touch it unless we have a CPA on staff, which I don't. So I've helped people get through audits, but I do not do the auditing personally.
I mean, I don't think anybody really wants to do an audit. To be honest with you, that's probably the one thing. Yeah, that sounds like the one thing that people run away from when they hear that A word. It's like the A word at this point. It's like a bad juju word you don't want to say. No, that's interesting though. That's interesting, especially you outlining that credential. So I'm a business owner in California, and I run into some issues. Or hey, I just reach out. I listen to this podcast and I reach out to you saying, hey, Bobby, can you help me out? You're able to help anybody out in the 50 states, and like you're saying, even foreign. But really, you can help out anybody in the 50 states right now.
Correct.
That's awesome. That's awesome. And I know you said you're building up your clientele. We'll start with the good part. What has been some of the success that you have had so far in this business?
So I would say my first client. So I have run $0 in marketing. I have never spent a penny on it. I have just went through Facebook, Instagram, any online resource I have. So I went on, a local page, marketed my services with a post, got some feedback. Someone, responded, hey, I need a bookkeeper. And I was like, all right, sure. So looked at her books. They were a mess. It was absolute, there was not a single reconciled transaction for the year 2020. Ooh. And it was halfway through 2021. So it was rough.
Yeah.
So what I did was she had a QuickBooks account that was also because of her charity. She's a charitable organization. And so she had about $150 a month QuickBook online subscription. So I was like, it seems a little bit high because, she wasn't, the charity wasn't getting a lot of a surplus. So I was like, let's downgrade this a little bit. I'm going to charge you a little bit more than your previous bookkeeper was, but I'm going to provide so much more value that you're not going to care how much I charge. And then even this year, I actually doubled that fee too. And she was like, all right, sure. Because of just the immense value that I provided her. And there are some bookkeepers that work on an hourly basis. For me, I use a fixed monthly rate based on the work and the scale of it. So obviously, as the business grows and becomes, there's more transaction volume, et cetera, I'm going to have to charge a little bit more. So that being said, I took her books from 0 to 100 perfect. All of 2020 I reconciled, and then halfway through 2021, she was, pretty late in filing her 990, and for 2020, it was like halfway through the year, still not filed. We had like till I believe September, to file it. Within 3 months, we went to another CPA firm, got her an audit, got her 2020 return in, accepted, bing, bang, boom, done. And then we even got her a grant for this current year. So she's done so much better with my services than the previous bookkeeper who
we won't say
shall not be named.
Yeah, we don't got it.
I'm not going to throw shade on another.
You know who you are. So we don't got to throw no shade on them. But no, hey man, we gotta give props when props is needed, and you sounds like you're killing it. That was, I mean, you talk about charging more for a fee, but if you can save somebody money on the back end because you're doing such a good job, I feel like you're earning, you're getting what you're worth. And that's I'll say this, you're in a lane that you get what you pay for, and it can hurt you on the front end or the back end. So yeah, it sounds like people need to pay up. So appreciate that good story. Of course, there's always the other side of business. What has been a struggle for you going through your business and starting this up in your first year?
I'd say just overall, just the management aspect. For time management, I have to learn the difference between, when should I be doing work and when shouldn't I? Because I do work 40 hours a week at my financial analyst job still. I am going to school for my MBA currently, full time. And I'm doing this as like my side hustle / soon to be converted to full-time business. And, just the amount of clients that come in, I can't help everyone, but I'm definitely sure going to try to. And, that might impact my relationship with my wife, or, me taking care of my dog, etc. Everything is just a time crunch, and especially during tax season, because you got everybody coming at you trying to get, the taxes done. And then, even sometimes when I tell them my fee structure, and I might not know how much I have to charge until I actually, have the work in front of me and I know what I'm dealing with. And because they'll be like, oh, why can't I just go to H&R Block or TurboTax? And I'm like, you're free to go do that as much as you want, but you might not be getting, the maximum amount of deductions. You're not gonna have access to tax planning, because a lot of EAs actually get are outsourced by H&R Block for pennies on the dollar. But they're not going to provide any major sort of value. They're just going to do your return. They're not going to go through your business holdings. They're not going to see oh, you're lacking in this area where you could do better in these areas. Vice, you're paying too much tax because you're showing too much of a profit when you don't have to be. You could be depreciating some things. Maybe something was missed, or maybe you can purchase additional assets for your business so we can depreciate it, or even, just depreciate the whole thing in a year. So it really depends.
We're definitely going to get, that's like, that's the fun round when I get to ask you all the questions of, hey, how can business owners take advantage of things? What are some tips and tricks you got? But I want to give a shout out to TurboTax and H&R Block. No plug, not gonna pay for this. No, but if you have if you have to schedule if you have one scheduling, like one schedule form you have to file, TurboTax will do it for free. So if you have a general or basic setup in your personal life and, you know, that's what you need to do, use it, you know, like don't waste a resource like that. But for people who, like in my case, in your case, maybe we have 1099s, we have W-2s, and we have our K forms, right? Like people who have multiple scheduling or multiple forms or a complicated tax return, you definitely need to reach out to somebody who is an expert in this, so that way you can get the more bang for your buck, as you're saying, Bobby. But yeah, no, I think you hit the nail on the head about time management. That's something I talked about in previous episodes, as the audience knows. But yeah, it definitely can everything can get crunched together, and now you're kind of figure out which lane you're sitting in. Like, you know, you're sitting at home right now, but are you in, you know, financial strategist? Are you in your financial advisor lane? Like, are you going to walk your dog right now? Like, there's so many different lanes that you actually at home are just sitting in. How has it been, I guess, working from home that extensive amount of time, and while doing all these things that, you know, your MBA, your 2 jobs, and being a family man?
Oh man, you know, it has been quite a struggle. Sometimes I do find myself with some extra free time where, you know, I like to play, you know, a video game or something.
Oh, Xbox or PlayStation.
Yeah.
Which
Well,
one?
for me, I'm a computer guy.
Oh,
So I'm a
okay.
PC gamer.
Okay.
So even when I was over at the academy, yep, I was PC gamer through and through. I do have PlayStation 4 though. I didn't get the 5. Not yet.
Nobody get the 5. If you have the 5, it's a
Yeah,
myth.
nobody can get
It's a
the
myth.
5.
Yeah.
Good old supply chain, chip shortages, etc.
Yeah,
That's a whole other
I need to
thing.
get a logistics or supply person on here next to talk about that, because it's ridiculous that we're still going through. But I digress. Please continue.
Yeah. Yeah, just like, once again, that time management aspect, gotta, you know, figure out, did I work hard enough that I can take that time off, or should I be doing something more productive?
Mm-hmm.
That's the biggest thing.
So what do you have a tip, or do you have something that works for you that, you know, do you have a timer on, or, you know, what helps you separate the two?
So I'm one for, I'm big on like talking out loud to myself a little bit.
Okay.
I'm not crazy, I promise. But
Hey.
what I do is at the beginning of each day, I talk to myself in the mirror. I'm like, you have to do this, you have to do this, you have to do this, and then this. And I plan out my day very meticulously.
Mm-hmm.
And once I get a certain portion done by a certain time of the day, then I know, like, oh, I can goof off a little bit here. I have a little bit more free time over here. So I can kind of, relax a little bit, take a load off, maybe have a drink. Or, sometimes things just pop up too, where, I don't get a break throughout the whole day. And that could just be something simple like, I got to walk my dog right now or something, unforeseen, which you can never plan out the full day.
Yeah, of course.
Got to have some leeway there.
But I think my wife always says to be kind to myself, because you probably have felt this too, where you can be the worst critic in the room can be yourself. You can be pushing yourself so hard while everybody around you saying you're doing a great job, like take it easy. But you're holding yourself to a standard that's even higher than people around you are holding yourself to. So I think, hey, like you're saying, you can't plan out the entire day. I definitely try to plan out my entire day. I've gotten better at making my task list for the day smaller, little milestones to win. But I think that's something that audience can definitely take with them, just in terms of the other entrepreneurs and how they separate their time management and separate their lives so they can enjoy the fruits of their labor. But I appreciate you sharing that, Bob. Appreciate that. All right. You ready for the fun time?
Oh, yeah.
All right, let's do this. This is where everybody wants to, I feel like everybody just wants to get somebody in your shoes and say, hey, how can you make me more money? How can I save more money by giving less to the government? So I'll start it with that grand of a question. I notice your website says within regulations. What are some things that people can do, business owners, 1099, et cetera, to maximize their tax return?
All right. Well, originally, so for business owners and self-employed people, originally, specifically for them, they can open up certain retirement accounts. So solo 401k, depending, and it obviously depends on employees and everything, whether you do a solo or, a regular 401k, or maybe a SEP IRA, or maybe just a regular IRA too. There's all of these different financial instruments that you have available to you that a lot of people don't even realize that they have. So just like, for example, just anyone could do this. Just if you want to pay less in taxes, you have to show less taxable income. One of the ways you can do that is by contributing to an individual retirement account, or IRA. Now this is pre-tax income that will be going in there, and you get to write it off on your taxes and that will grow until retirement. That you can put currently. You can put about 6,000 in there a year, unless you're, above, I believe, age 50. Can't remember off the top of my head, but I think it's 50. You can put 7,000 in, and that will, grow with, assume you put in the S&P 500, grows probably about 10% a year on average, which is another thing, because 10% average in the market, when you're talking percentages, you always have to remember that down years are more effective than up years. So the reason for that is, if I have a portfolio that goes up 5% one year and then it goes down 5%, I've actually lost money. I've lost more than I've gained, because now I had a higher amount one year, and then it minus 5% that year. So now I'm actually below my initial investment, but the average is 0%. So because when they're talking about, averages, 10%, it could average, 20% one year, and then
go down. Yep.
It could go, it can go lower. So then it could, it could be 0% one year, and then you've averaged 10%. So you made money one year, you didn't make money the other year. And, just stuff like that. But, that's kind of digressing into investing, which I also know quite a lot about. I was a financial advisor at one point. So.
Part two coming, y'all. Investments.
Yeah. So there is contributing to retirement accounts. Then there are other aspects, like just your business structure. So if you're making over $50,000 a year and, in profit, and you're self-employed, or, just another business owner, you should probably consider converting over to an S corporation. Now, what this is going to do is that it's going to save on your self-employment taxes. So when you get that 1099, what do they take off? What do you have to take off the top? 15.3% for self-employment taxes. When you're a W-2 employee, they take off 7.65%, and the employer pays the other 7.65%. So that just comes off just right off the top. Now, if you're an S corp owner, and let's say you're making $100,000 a year, okay? Let's say you don't want to pay self-employment taxes on all $100,000, because you pay 15.3% up to like $148,000 for 2022. So when you are an S corp, you can pay yourself wages, and your business can write it off as a deduction for the 7.65%, and then obviously they withheld the other 7.65%. Let's say you decide, I'll pay myself $50,000. Okay. Self-employment taxes won't apply to the next $50,000 in profit then. So you'll save yourself a lot of money on tax. You'll save about $7,600-ish, $7,650, just about right there.
Yeah, with the metrics you gave. Wow. Wow. Yeah. And I think a lot of people, especially when they're beginning the business structure, I know my business is an LLC, right? But then you see the other ones floating around there. It's like, well, I'll get to that later. I'll get to that later. But that's definitely, especially the S corp. That was something I just saw buzzword. Okay, cool. I'm not going to choose that route, but that's I'll be honest with you. That's a very good argument or good good situation to be in if you are an S corp. If you change to an S corp for your business structure, that's great. You got more, man? Come on, I know you got more.
Oh yeah, of course. Obviously, then there's also the C corp. It's the kind of big brother of the S corp, because you have all the big corporations, Disney, everything.
That's one we all know about. Yeah.
Yeah, everybody knows about the C corp. Now, the issue with the C corp is the issue of double taxation. So the corporation gets taxed at its own rate of currently 21%, according to the Tax Cuts and Jobs Act.
20.
Which
say that 20 what?
21%.
Oh my gosh!
Flat across the profits.
I'll throw up.
Obviously, they're going to try to show as little profit as possible in that regard, but they'll try to get as much depreciation in there so they reduce their overall official profits, but their EBITDAs will still be pretty high. So any profit after depreciation, interest, and they'll pay about 21% in taxes, and then the profit that's left over after the taxes will go into their retained earnings. And now that is going to be in their they can decide to release a dividend at that point. So let's say, same S corp person, but now it's a C corp. Instead of paying any wages, salary, anything like that, any sort of pay besides dividends, they'll pay 21,000 off the top, and then they're going to get dividend income on the rest. So, just quick calculation, it'll be $79,000 they'll have left, and then they're going to pay their initial tax rate on top of that. At that point, it's not really worth it. Yeah. So that's where the S corp beats out the C corp, is when it's a smaller business like that. Now, when you're talking $1 million plus in profit, you're talking significant decreases, because as S corp, as S corp makes more money, the compensation has to be reasonable according to the IRS, but the IRS doesn't define reasonable compensation. So that's the issue. So if they don't find it reasonable by their arbitrary standards, they might try to say, hey, you can't do that. Mm-hmm. Like if I'm making $1 million plus and I'm paying myself like $20,000, that's not reasonable.
Yeah.
They're not going to be like, oh, well, screw, the other $128,000 we could have taxed you at 15.3%. No, gotcha. They're not going to say that. They're going to say, hey, give us our money. You owe us, because that's not a reasonable compensation.
Yeah. Yeah.
And you're probably going to get an audit, and you're going to have to pay all these taxes and fees plus interest, which will probably be like 10-15% of what you owed initially, if you did everything right. And then it can be a mess sometimes. Mm-hmm. And that's where some people like me make a lot of money, is IRS representation. So people that get in trouble like that, we're the ones that kind of help themselves by helping them like basically bail them out of the IRS litigations.
I understand. And I do want to take 2 steps back, or maybe 1 step back. Can you touch on writing off depreciation? I know this happens in real estate. This happens in business owners in terms of equipment they acquire. But can you kind of explain that to the audience?
So there's several different types of depreciation, and then depreciation schedules. So by depreciation schedules, I mean just the scale, the timeline of depreciation. So for like Section 179 deductions, that's a 100% depreciation, where you can write off up to $1,050,000 as of now on certain types of expenses. Now this can be like a massive truck or something, or it can be anything up to that limit.
So this is where the social media is it got into my head. of course, we know the Mercedes G-Wagon, right? Like, you know, how ridiculous that. So apparently there was a rumor going around that business owners are buying that vehicle, and because it weighs a certain amount of, like you're saying, it weighs a certain amount, it actually can get written off as a depreciation asset on your taxes.
Correct.
So that's true, huh?
It is. And
man,
the thing about that though is that there has to be a specific business use for it. If it's not like necessary for your business, why are you buying it? That's the big thing.
Gotcha. That's what they're going to ask. Okay.
It should be something that's going to help you garner more revenue, or, you know, reduce expenses somehow. I mean, just because you take depreciation, all depreciation isn't equal. So, for example, the depreciation on real estate, you can depreciate a property, specifically the building value, the value of the building, not the land, by 27 and a half years. So over the course of that, you can save, you know, 5 to 30, you know, depending on how valuable the property is. So basically, let's say I have $1 million property, land value is 200,000. So property value, 800,000, I can depreciate over 27 and a half years. Now, I got to do a little bit of math because I can't just divide that off the top of my head. So,
hey, if you could, I would, more power to you, because
so
public math, I'm not, you know, I can't do it.
In that aspect, you would see the first $29,000 of profit in that property, assuming it's rented out, or if it's $1 million profit, it should be, you know, rented out about 1% of its value a month to cash, to like almost guarantee cash flow. You're looking at, you know, 10,000 a month in revenue, probably from rents. You know, I'm not assuming that, you know, there's a vacancy anywhere on that. So,
of course,
bear in mind. But you can write off $29,000 in depreciation every year on that. So that goes, and that's what goes pretty much to paying off the mortgage.
That's
right there.
Nice. Yeah.
So then you'll probably have some left over of the unused, basically free cash flow there. And then any of the additional profits will get taxed. And then you'll have your after-tax profits plus whatever's left from the depreciation after paying off the mortgage.
So just and this is one category we're talking about here, though, but it applies across all spectrums of equipment, real estate, etc. But you're outlining how you can save money. And if you went to TurboTax or to H&R Block, no offense to them, but you're not going to get the same type of detail that you're going to get going to somebody like you.
Correct. So, for example, my mom, my mom, my uncle, and my mom and her siblings. We'll just say that. She got 3 siblings that they all jointly own an investment property on. I literally just sent out a tax estimate letter because they lost like all their document. They didn't have any documents for any depreciation or any, because my grandmother was not taking depreciation when she was renting it out. So if you decide not to take depreciation, or your tax preparer or whoever does your taxes doesn't, you know, take depreciation on your Schedule E, which is for your passive income. If they don't take that, you don't get the tax write-off. You don't get it unless you file for a change of accounting methods, and then you can take all the depreciation at once. Now, before they sold it, none of them did that. So, and they were actually, found out they were actually filing all incorrectly because my grandmother didn't technically actually own the property because she gifted it to her children. Now, that becomes its own issue because, you know, I think she was thinking of old laws where, you know, there wasn't any like taxes involved, etc. You know, don't have to worry about it. But the stepped up basis from inheriting a property is so much better than if you gift a property. So if you set up like a living trust or something, you can, you know, control the living trust while you're alive, and then when you die, you know, it passes on, you know, and actually in most cases, I'm pretty sure you can avoid probate. I'm not a lawyer, but So I'm not an expert on trusts, but I do know some of the tax stuff behind it because I was tested on it. So you'll avoid probates, plus the property will pass without any kind of litigation if like someone gets pissed about it or whatever, family member, because sometimes family members can be vindictive at those hearings.
Yeah. Yep.
So when they were gifted the property back in 2017, they basically were gifted the basis of my grandmother, who got it from her mother, who gifted it. It was absolutely insane. So it was like gifted back in like the 90s. So we're talking like 30 years ago. Nobody's keeping documents that long.
Of course, yeah.
You might even have titles and deeds that aren't in people's possession after that long.
Yeah.
Even though they should be. So when that happened, my great grandmother, her husband built the place for $8,800 back in like the 1930s.
What a time to be alive.
Yeah. So essentially the basis was $4,400 because 50% of the property was gifted to my grandmother and then her sister. And then when my grandmother's sister died, her basis passed on in a stepped up basis to my grandmother. None of my family really understood this implication. And, if they didn't talk with me about it and I didn't find this out, they would have done their taxes in 2021 and they would have gotten capital gains, and they would have gotten capital gains tax on $260,000 at about 15%. So obviously it splits between each partner. So I calculated each of their respective capital gains and depreciation recapture, which when you do sell an investment property in real estate, you have depreciation recapture, which the IRS taxes you on it because you wrote it off.
With that, actually, this is a personal question now.
Okay.
I was told, a little birdie, again, the social media birdie. It's I tried to get it away. I scroll, it comes back. I'm sorry, but I was told or heard that I have a property worth, let's just say, $150K. I sell it for $180K.
Okay.
In 5 years. And in 5 years, the property, because I bought it for $150, and after paying off loans, et cetera, in principal, let's say it's down to $110. I was told that I should refinance before I sell the property, because tax-wise, if I refinance, unless I refinance to $165, I would only pay the difference between the selling price and how much I have left on the loan. Again, if I refinance, it goes higher, versus if I sell it at 170 and I have 110 on it, then I have to pay that taxes that in between. Can you touch on that? Because again, just trying to see what is true and what's not true.
That's actually the first time hearing of that.
Oh, I got him, y'all. I got him.
You did. That's actually that's a really good question. I don't know off the top of my head, but I will get you back. I'll figure that out for you after that. So that's a really good question. Now, obviously, that doesn't sound like it would be allowed. Like, it seems like the cost basis would probably, because you're taking money out. So it's essentially like a cash out refinance, right? Is that it?
Yes.
Okay. So that's difficult, because even with that, though, cash out refinance, they'll only allow you to really take out 20%. Well, the up to the 20%, you still got to have the 20% equity in there in order to not have PMI, et cetera. So yeah, that's difficult, because technically it would increase the cost basis, but because it's just a cash out refi, it might not apply. It's different. It's weird, because technically it is just like it's like repurchasing a property essentially.
Yes.
At a new value.
Mm-hmm.
So it makes sense for that, but I don't know. It could be a loophole there. I can't, confirm or deny it.
This is what we're giving y'all here at Network Nights, the loopholes and taxes, because I don't want to pay taxes. Oh man, no, I'll let you. Hey, what we'll do is we'll get offline, and if you do get the answer, you find out, we'll just come back and give the audience a kind of an update, informal update on, hey, this is the answer to that question. But I really appreciate it. Again, this is personal for me because I'm in that situation now where, hey, do I refinance? But then do I not? Is there a loophole here that I can kind of take advantage of? But it'd be it's really, it wouldn't be the smartest thing to do to act on social media posts and stuff like that. So I'll wait for the experts like yourself to let me know.
Yeah, definitely a good idea. So yeah, I don't take anything from social media at face value. Mm-hmm. Usually there's some kind of angle to it, or someone misread something.
Yep.
So that is a good point though, and I will actually get back to you on that because that's interesting to me. It actually piqued my curiosity. How can I do this? if that's true, how can I do that? It's great.
Hey, this will be the 1 minute clip on Instagram because everybody's gonna be like, oh, they found a way. Boom, here we go.
Yeah.
But I mean, moving on. Is there any other? I mean, we could probably be here for days talking about loopholes or different ways you can maximize your tax return. Is there any other ones you want to highlight at this moment?
There is one that is kind of skeevy. Because it's it's kind of difficult to wrap your head around. So just bear with me. It's called the Augusta rule. Now, have you ever heard of this rule?
Nope.
Okay, so it's one of those it's like buried in the tax law. It's like 2,000 pages, whatever. When you're renting a personal residence, the Augusta rule is if you are renting it out for more than 14 days, so 15 days or more, you have to report it as taxable income. That's the rule.
Okay.
Now, if you do below that, it's not taxable.
Whoa.
Now.
Whoa.
Yeah.
Hold on now, because this is like Airbnb stuff.
Yes. Similar. It has to be for business purposes, and there has to be a legit reason for it to happen. So let's say you rent out your home. Let's say I rented out my home for like a business meeting of several executives or like clients or whatever, and we're going to have like a small conference in the area. Mm-hmm. Now I could rent out my home to them for maximum 14 days. Obviously the rent has to be, within reason. It has to be market value of the rent.
Okay.
So, like an Airbnb type, if I did like $300-400 a night, and I rent it out to like 4 or 5 people, you can make a lot of money, not taxable to that. And because it would technically be considered a travel expense, they get to write it off.
Oh, so it's both sides winning here.
Yes.
Oh.
So it is a very skeevy kind of loophole because some people take advantage of it, and they really shouldn't be, because it's one of those things like, how can you really prove some of the things on there? And it's very difficult. But if you do take advantage of this, make sure you have everything documented. Everything is done correctly. Ask a CPA or another EA or me if you want.
There we go.
And confirm that is something that you can legit do, because there are people that try to do it and they totally mess it up. They end up having to pay taxes on it because the IRS you have to convince the IRS that you deserve that. Essentially, that is warranted. And that comes with an audit. at your own risk. You can do it.
All this is at your own risk, people.
At your own risk.
You are not hiring Bobby right now. This is free game, but you can hire Bobby and he can help you out with that risk. Bobby, you mentioned something that triggered my mind. I'm going here, okay? With Cash App, Zelle, PayPal, all these, Venmo, we're exchanging money back and forth like hotcakes. You know what I'm saying? Just going left and right, up and down. I got a 1099 from Venmo saying, hey, here you go. And I don't get any income from Venmo. I don't get anything. Like, I don't have my business does not revolve around that app. But me exchanging money back and forth for the entire year, I guess, because over $600 has been exchanged or into my deposit, I got 1099. What is, what is your stance on this? Like, especially if with all these apps that provide money exchanges, do we have to report that? Is that taxable income, even though it's not income? What should we do in this case where we're getting 1099s from PayPal and all these other money exchange services now?
Well, if you are not running your business off of it, you don't need to worry. It's not taxable.
There we go. There we go.
That's the simple answer. And then it's, then there's the people that don't say that they're running stuff on there, and they are. And, they just better hope they don't get caught.
I mean, they'll get caught in like 10 years and then they'll owe a lot of money. So,
and they'll owe penalties, interest fee, whole 9 yards. But, because they are trying to track, track transactions on those lower level, because they realize there's, billions of dollars that are just not taxed from, small entrepreneurs that are, just trying to make ends meet. And they're like, oh, new source of tax revenue. Let's start giving 1099. Let's start forcing 1099Ks on these apps, because they're not necessarily reporting. Because I think, what is the threshold? Like it was 10,000 or 25,000, something like that. Now it's only 600.
Yeah, it's nothing now.
Yeah, it's for the year. So basically, any money you give, is reported.
And I got pissed off because I went on a rant the other day. I'm a season ticket holder for the Charlotte Hornets, right? And I pay money with the taxes to get these tickets for the year, at a consistent basis. I can't make every game, so I sell some of the tickets off on Ticketmaster. Well, I hit the threshold of $600, and they said, hey, here's your 1099 form. You got to pay taxes on that now. So I'm like, wait, I paid taxes to get the tickets. I already got them. They're mine now. Well, now I'm going to sell them off. I got to pay taxes again. So I'm getting like double taxed on. Yeah, it just hurts. Just sucks now. Now I feel like an adult because I'm complaining about taxes. But yeah, side note, that was just the rant.
For reselling, you do have to pay taxes on that. So that is, that sucks. You will have to pay, I believe, capital gain. Yeah, capital gains on that, I believe.
I'm not
something. It's either regular income or it's capital gains. One of the two. Because it depends. Well, I guess it depends on how you view the tickets. If they're more of a commodity for reselling, in which case it'd probably be income, or if you were buying them as like a financial asset, which is probably just going to be taxed at a regular rate in that case. So I wouldn't worry about it too much.
Yeah, I'm just pissed off about it. But what I actually use them for is for my business. I have a lot of business meetings with those tickets, so it might be a business expense, but we'll see we'll see how this goes. So I guess moving along, how do you reduce the chances of an IRS audit?
The biggest thing is that you report everything accurately. That is the number one. And you have to be reporting things that are within reason. So, for example, if I were to write off, my mileage, I should not be putting a lot of zeros at the end of things, because nobody drives exactly, 150 miles. Nobody drives exactly, 2,430 miles. So it's just, they become suspectful of that.
Mm-hmm.
And just simple things like that. That might, cause them to do that. But I haven't heard of it happening yet. The biggest thing though is reporting your 1099s, your W-2s. If you're not reporting stuff like that, then they're going to come after you. It's like in their algorithms that they will.
Yeah.
That's the biggest thing that you can look out for is accurately reporting all your 1099s and W-2s or Schedule K-1s if you're a partnership.
Yep.
That's the biggest one. And then pretty much it's just, random dumb luck at that point. So if you're making under $100,000, you're likely never going to get an audit. If you're between 100 to $1 million, you got like a 1% chance every year.
Mm-hmm.
If you make over $1 million, it goes up to 5%.
If you're Disney, you're getting audited, pretty much.
More than likely, yeah. Of course, they that's where they hire, the big four like CPA firms, like Deloitte, PwC. They'll have them come in and perform their audits because I think that they actually are required to have audited financial statements at every quarter. Actually, I think.
Mm-hmm. That makes sense. Just when you're that big, you gotta answer to the man eventually. It's just probably they're probably gonna have a closer eye on you at that point. So that makes sense.
And we've already been through like the decade of horrific financial accounting where we saw a whole a big four accounting firm go under because they lost their reputation with Enron.
Oh, Enron. At least
if you remember that one.
Yeah, I saw a good that was actually my first insight into a whole mess of stuff. But no, I saw a good documentary on Enron. For those who don't know, go back in your history books. We don't even got to touch on that right now. But it's actually a really fascinating documentary about what happened, and it shaped a lot for America after that too.
Definitely did.
Yeah. Well, shoot, man, we talked about a lot, man. For the future, tell the audience a little bit about what's coming in the future. You don't got to go like 10-year plan or something like that, but what do you see in the next year?
In the next year, I'm looking at a couple of high net worth individual clients that I'm looking forward to working with, and e-commerce and trucking and all that. So I'm, looking forward to, onboarding them because, they are also veterans as well. And, one of them got pretty lucky at crypto. So he's got a huge tax bill this year that I have to help him navigate.
I didn't even ask you that question.
Oh, part 2.
That's a huge. Oh man, people are gonna kill me. They're like, you didn't talk about crypto and taxes at all. You saw H&R Block or was it TurboTax? I think it was H. I think it's both of them. Their big commercial now is, hey, crypto is confusing, but let us handle it for you. So, they're trying to niche people because I guess that's gonna turn into a whole thing. But I feel like that's a part 2. We'll do another part 2 to this to get some more answers about some taxes there. But
definitely.
Awesome. Anything else you got planned for the next year?
So yeah, just onboard, new clients, get that consistent revenue coming in, hopefully within 2 to 3 years, I'll decide, hey, I can retire my wife from working, and then I'll, quit my full-time job and work full-time for, my company after I can hire a couple people. Because currently it's just me. I'm the only one running this. But yeah, that's where that time management thing comes in. So when a workload becomes too much, I want to be working with the stuff that's going to generate the most revenue. So I'm going to be primarily working with the CFO clients. And then on the lower end, I'm going to have the bookkeeping and the accounting work, budgeting work, and then maybe if I decide to, when I get big enough, probably hire even a CPA to help out with, just reviewing some taxes and also probably doing some audit work. But for right now, I don't need to do that. So.
Hey man, it sounds like all good stuff. And I mean, after hearing this conversation and the audience hearing it, I guarantee you're going to have no issues expanding and growing, man. And we wish you the best of luck here at Network Nights. Before we sign off, man, definitely give the audience, please, all the information where they can reach you at.
So you can reach me at Bobby at TheFinancialStrategists.com. That's strategists with the S at the end. And then there's my website, TheFinancialStrategist.com. Mm-hmm. Then we have my Instagram, The Financial Strategist. Pretty much everything is The Financial Strategist.
I was like,
but
how many times are you going to? No, it's okay.
My Facebook page, The Financial Strategist.
And of course, y'all, check the show notes. We keep everything there in terms of giving people their credit, their flowers, the music, the whole nine. So check all that. I want to give a big shout out to Bobby, man. Really bless up, man. Appreciate you coming through. And just, again, giving people free game so they can make themselves better. All right. Yeah, I'm, of course, your host, Leaf Israel. And we are signing off March 1st from the Network Nights podcast. I hope y'all have a good week. Hopefully it's not too bleak. Definitely the weather down here in the South a little bit better, but hey, Maryland will catch up too, man. Yeah, y'all have a good one. Peace out.
Yeah. Let's get it, let's go. Let's get it, 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 let's go. Let's get it, let's
check
get
it. Big bad, that's preem. Pirates attacking the dreams. Get embarrassed out making a scene. All of these characters facing their fiends. I told my cousin we got it, we gon' get up out of here by any means. This for the time we was hitting that deli, we split up that turkey with cheese. I had to make a decision, my cousin told me listen, you nice but ain't master the craft. Stick to the script and keep working your penmanship. When it's our time we gon' add up the tax. Bro, that's a fact. Niggas ain't listening to you until you pull up in the back. Bro, that's a fact. So the win before it started, I'ma get up out of this.